Recording now.
I'd like to welcome everyone to the September edition of our Ag Economics Current Issues. Today we've got Kim Anderson giving us a crop update, market outlook, etc. And then followed by Trent Milacek, the Western Oklahoma area AgEcon specialist, providing some budgets, expected costs and returns, etc. I'll be watching the text chat, so if you have anything, put something in the chat box, let me know, or I'll make sure the presenters get questions, etc. Also, when this is over with, I'll make sure everybody gets credit for attending. So without further ado, let's go ahead and get started. Kim, thank you, sir.
Thank you, JC. I think. Trent and I were visiting about what we could do today, and what we came up with is I'm going to do a 2021 price outlook, and actually I have price outlook for major commodities over the next 5 years. I got the baselines for the price outlook from USDA's February report, where they did a 10-year price outlook for the major commodities, and then the Policy Research Institute at Missouri does a 5-year outlook, and I adjusted the USDA and Missouri's to Oklahoma and came up with projections for our prices. If you look at wheat, the projection I came up with by, again, using USDA and the Policy Research Institute at University of Missouri was a 2021 average annual price of $4, excuse me, of $4.75. Boy, they always get in your throat when you're talking. Now, I look back over the last 10 years at the average annual price range for wheat in Oklahoma, and our low price average annual was $3.44 in 2016 and $7.45 in 2012. If you're looking at corn, that projection for 2021 marketing year came in at $3.60. In 2016, that average price was $3.39. Now, these are Oklahoma average prices. And in 12, it was $7.09. For corn or sorghum or milo, the projection is $3.45. However, if you'll take China into consideration, if you'll look at the current milo price versus the corn price, sorghum or milo is about 90 cents above corn right now. And that's because China's buying a lot of sorghum. If they continue to do that, then I think you can run that projection up to about $4.20. We do not have USDA marketing year prices for sorghum. I don't know why we don't have those, but we don't have them for Oklahoma, and I couldn't find them for the U.S. On soybeans, the projection is $8.60. The high was in 2018, $7.89, and the low was in 18, $7.89, and the high was in 12 at $14.40. Cotton we've got in at 62 cents. 13 was the low at 55 cents, and 11 high at 82 cents. With canola, neither Missouri nor USDA had projected canola prices, so I took out my crystal ball and came out with $5.90. My gut tells me that's probably about 20 cents too high, but that's what my pencil came up with, so that's what I'm putting down there. In 19, the average price was $5.30, and in 2012 is $12.60. I'll point out that back in 11, 12, and 13, the market was trying to build production in this part of the world in Oklahoma, and I believe they were, the prices were relatively high, but I think they were paying a premium for canola to get canola produced higher. If I was looking at a 12, at a high range here, I'd probably put that at about $10. If you look at breaking news for wheat, world wheat production for 2020 is 28.1 billion bushels. That is a record. It's just slightly higher than 2019. I think it will probably go up on this month's crop report, if not on the next one, because reports show increased production in Russia. And this morning I got a report that said they were increasing Australian wheat production estimates. World wheat ending stocks at 11.6 billion bushels. That's a record. Last year it was a record 11.1 billion bushel. The 5-year average is 10.1 billion bushels. So you can see we've got a lot of stocks in the world for wheat, and that 11.6 will probably go up to 11.7. World hard red winter wheat production, it's estimated about 8.5 billion bushels. Now that does include Australia. Last year it was 8 billion. That 500,000, you had about a 400 million bushel increase in Australian production, and probably about a 100 million bushel increase in Russian productions, where most of that came from. If you look at the, in 17, the record was 8.8 billion bushels for hard wheat. Australia, it was 955 million on the last USDA report. Like I said, Australian board increased that to just over 1 billion bushels this morning. Black Sea wheat production at 4.3 billion. That will probably go up to 0.35 or maybe 4.4 with increased Russian production. The European Union's production, that soft red winter wheat, is down 26% to 5 billion bushels. It was 5.7 billion last year. And if you look at the protein premium of ordinary, that's below 11% versus 12.4% protein. That premium is 45 cents, and that's held that 45-cent level for a couple months now. If you want to know when to sell wheat, you can forget about Outlook. This tells you to sell it in June, July, and August. If you had sold every year since 2008 in June, you'd have averaged 574. In July, 569, and in August, 570. Not a nickel's worth of difference there in any of those. So you'd want to do a third and a third and a third in June, July, and August rather than June, October, and December. The world situation, I think the good news here is that we had big increases in wheat production from really about 2007 on. It appears to have stabilized around 28 billion bushels. You can go back to 16, 27.8, 28, 26.9, a little low in 18, but 19 and 20 both at 28.1. So I think our world production is beginning to stabilize, and now what we got to do is get consumption to catch up with production. If you look at the ending stocks, as you'd expect, with a big increase in production and small increases in consumption, you'd expect increases in ending stocks. And if you look at the stocks to use ratio, that's how our ending stocks divided by how much we use during the year. You'll see that that ratio has went from 29% in 2013 to 42% projected for 2020. And that may go up just a little bit. If you look at the United States, wheat production, I hate to sit here to say I've been talking myself out of a job, but with the prices relatively low and not much chance that they're going to go higher, with the cost of production being above these prices, we'd expect to see wheat to come out of, or land to come out of wheat production, and that's what we've seen. I think we're seeing U.S. production stabilize around 1.9 billion bushels, rather than around 2.1 was the average all the way into 16. And since our 2.3 billion bushel 16 crop, you can see it's been down there below 1.9 just about every year. Our consumption is also relatively stable at 2 billion bushels. We built our ending stocks to 1 billion. We've got them slightly below that now. And we had our prices up. If you go back to 11 and 12, we were above 7. we brought our price down to stabilize somewhere around $4.60 a bushel. If you look at, and I show you this because I've got the average annual projected price by USDA and the projected price by Missouri for the United States. If you adjust it back to Oklahoma, how does Oklahoma and US price compare? Well, if you look at the last 20 years, the Oklahoma price is 12 cents below the US, 10 years, 23 cents, and the last 5 years, 32 cents. And I think that's because of protein. So if you look at the last 10 years, it's a minus 23 cents. However, you look at the last 2 or 3, and I believe this year too, by September 1, we have sold from 75 to 80% of our wheat, which is what that table I showed you earlier said we should be doing. And if you compare the July-August average Oklahoma wheat price with the July-August average US price, you see that the Oklahoma price has been 3 cents on average above the US price, or about equal to it. Also, I looked at the average annual US price compared to the average June, July, and August US price, and they were relatively close. So if you're adjusting the US price down to Oklahoma price, do you use a minus 23 or do you use an even? That was the question. Here's my price projections for Oklahoma wheat as we go out through 25, 26. We're looking at about 435 this year. That USDA's prices are higher than my monthly average, my daily prices that I average out. But anyway, I've got 435, I believe is what the USDA will have us. I've got us at 475 next year. To get 475 or closer to $5, we've got to have protein, 22, 23, 488, 491, 497. So if I'm penciling out wheat production over the next 5 years, I'm probably going to use around $4.75. At the most, I might use $5. So if I'm budgeting out for next year, I think I'm going to use 475. Now that's average Oklahoma. Now this year, we've seen Southern Oklahoma wheat prices average higher than Northern Oklahoma prices. In the past couple of years, Northern Oklahoma has been above Southern Oklahoma, and I think a lot has to do with protein, where our protein's located. Any questions on wheat? Okay, looking at corn. Breaking news for corn, you got corn production in the world at 46.1 billion bushels. That's a record. Last year it was 44.2 billion bushels. Corn ending stocks at 12.5 billion bushels. That's down from 18, where we had the record at 12.6. I want to point out that stocks to use ratio on corn, that's the ending stocks divided by use, is the record was 46%, or the record was 27 point, I got to get my numbers here right. 12.6 was, yeah, the record, or in 18, it was 27%. This year it's 25%. So the stocks to use ratio is above average, but it's not a record like anyway. We got a lot of corn, let me put it that way. The corn export, 7.3 billion, that's world. US is 2.2 of that. Note that Brazil is projected to export 1.5 billion, Argentina 1.3, and Ukraine 1.3 billion bushels. And if you look at Ukraine exports, you go back 7 or 8 years, their corn exports were next to nothing. You combine those three, and you've got 4.2 billion bushels. So I think what we're seeing here is that in the corn, Brazil, Argentina, and Ukraine, and if you'll think about transportation to all the importing countries, Brazil and Argentina can match the USA on transportation costs. Ukraine and the Northern African, the European, the Asian countries can beat the US. And so I think we've seen Brazil, Argentina, and Ukraine doing to the US corn what Brazil did to soybeans and what the Black Sea did to wheat. In other words, we're losing our market. We're still extremely important in the market, but we don't have the strength we used to have. US corn prices are dependent on ethanol. That is the one marginal factor, I believe, that has a big impact on prices. And of course, exports. So you look at corn production, you can see there that record this year of 46.1, the past record 44.2. You see world corn production is increasing, and most of that is from increases in the Ukraine and Brazil. Argentina has been relatively stable. Corn production, you've seen a relatively good increase from 17 to 18, but it seems to be stabilizing around that 45 billion bushels, slightly under production. And you see, ending stocks staying relatively stable around your 12.5. You go back to 13 when we had our relatively high corn prices, 8.4 billion bushels ending stocks. And this level of ending stocks is projected to be maintained for the next few years. And that's why corn prices are projected to be relatively low. So you look at our prices for around 450 back in 13, they were above that in 11 and 12, and they're stabilizing. They're saying they're going to stabilize somewhere around $3.60 a bushel. 310 is projected price for this year. So on corn, as we work it out the next 5 years, 360 for 21, 22. USDA's got 2021 at 350 for Oklahoma. Now, Oklahoma corn prices run about 20 cents above the the US average corn price. So you got 360, 366, 360. So if I'm going to pencil out a corn budget for 2021, I'm probably going to use this 360. If I'm looking out in the long run, I'm probably going to look around 370, 360 to 370, somewhere in that vicinity. Any questions on corn? Okay, soybeans. Oh, you'll note that in all our crops we just got near record world production in stocks, 13.3 billion bushels. That's a record for soybeans. Brazil, as you know, over the last 15 years have increased soybeans production dramatically. Argentina's been relatively stable, and I'll show you what the U.S. has been doing here in just a minute. So our record is 13.3 this year. In 18, we had 13.2 billion bushels. So it's slightly above record, and we'll look at those closer in just a minute. Also, we've had a big increase in planted acres and harvested acres around the world. It seems to be stabilizing. The last 3 years, it's been between 300 and 310 million acres. Exports, world at 6 billion bushels. U.S. exports at 2.1, Brazil at 3.1 billion bushels. We can blame that on China, or we can blame that on the market. Brazil does have lower production costs for soybeans than the United States, and so they can undercut us in price. And if they can produce it, they can export it at a profit. And that, I believe, you can go back to policy and you go back to problems, political banting back and forth with China. But China plays the market. They know how to play the market, and they will play Brazil against the U.S. and vice versa. But the point is Brazil's got the acreage, they've got the land, and they've got lower production costs. So you got U.S. soybean prices are dependent upon weather. Is Brazil going to stabilize at their current level? Probably, because they've been increasing corn And we'll see that they've also been increasing cotton production. So they may be shifting to some other crops and try to get some crop rotation and some things like that in there. U.S. soybean production, around 4.4 billion bushels, had a short year last year, and our price around $8 and $8.35 to $8.60, somewhere in that vicinity over the last few years. Even with lower ending stocks, our price is staying relatively the same. And I think that's because Brazil is like the Black Sea, pretty much determines what the world wheat price is. I believe Brazil has the biggest control of what the soybean price is. And we're a residual supplier of beans. If you look at the world situation, you can see slightly higher soybean production here. That's from increases in Brazil, increases in consumption, that's China, and stable ending stocks. So if you look at your soybean prices, about $8.35, steady market between this year and next year. If there's one commodity that's got some potential for higher prices, I believe it's soybeans, maybe even corn. If there's talk about La Nina creating dry conditions in the southern hemisphere, if that happens, then we're going to have a higher price later in the year. But if you're looking out on the long run on your soybean price, they've got it somewhere around $8.60. And that's, if I was budgeting that out, that's probably what I'd use. Questions on soybeans? All right, cotton. Catching my breath here. Whew. Last year was 123 million bales production. I got to get used to, so I spell out bales here. Otherwise I'm going to be saying bushels. 118 million bushels this year. Last year was 123. A record is 124 million bales. That was in 2017. U.S. cotton production at 18 million bales. The 5-year average is 17, so it's slightly above average. Brazilian cotton production, it has been increasing. It's 12 million bales this year. Its record is 13.4. That was last year. The 10-year average production for cotton in Brazil is 7.9 million bales, and the 5-year average is 8.5. So you see, the last 3 years, they've had a dramatic increase in cotton production in Brazil. And this is where I'm saying that we may see them stabilize on soybeans and rotate into cotton and also into corn. I think they'll start that rotation. Brazil may stabilize unless they open up new land in these levels. World cotton ending stocks at 105 million bales. We'll look at that in a little more detail in just a minute. 42 million bale exports. I put that up there. The U.S. is 15 million of that. Brazil exports are up to 9 million bales. That's a record. If you look back in 2011, they were exporting between 2011 to today. The 9 is the highest. The lowest was in 11 at 2.8 million bales. So they've come from 2.8 up to 9 million bales of exports. U.S. cotton situation, relatively stable, a relatively big crop last year. That it resulted in lower stocks. You notice that 17 and 18, our 16 and 17 relatively good exports here. They went down in 18, 19, and 20. We've had rising ending stocks and of course lower prices. Prices around 59.60 cents here. If you look at the world cotton situation, again, a big crop last year. Relatively low use last year. I went back and looked at this. I don't know what happened on use last year, but that resulted in a big increase in ending stocks. And that's one reason one reason that may have been that low is cotton prices were so high. And with cotton prices probably moving over to polyesters and other fabrics, and as cotton prices came down, we came back into cotton. Oh, 2020, slightly lower production, still increased ending stocks because of the big increases over here and this low use in 2019. And relatively low use this year. If you look, you have to go back to 2015. Looking at cotton prices, 60 cents is the projected price for this year, 63 cents for 2021, 65 to 69 going out through 25, 26. Questions?
Kim, look at the text chat there. Saw's made a point.
Do what now?
Roger Saw has made a point that average annual market price for grain sorghum in Oklahoma has ranged from $270 in 2016 to $672 in 2012. 10-year average is about $420 per bushel.
Okay. Well, with that, Trent, I'll turn it over to you.
Excellent. Yeah, my screen, JC.
We see it.
Okay. All righty. Kim punted on this one and gave me the cost of production part of it. I don't know why he didn't want to talk about this, maybe because it's all subjective, but I'll do my best to talk about some of what I've been seeing. I'll probably spend the most time talking about soybeans just because I've planted quite a few of those this year, and it's turned into a little bit of a mess in terms of spending money on a crop and hoping for the best. But I think that's how a lot of our summer crops end up getting, if we're honest. So I'll again look at input costs for major commodities, what shortfalls we may see going forward. And no, probably not a clear winner. We can massage these budgets however we want to, kind of make them say what we want to, but we'll definitely have to consider the reality of the situation, which a lot of these commodities are going to be pretty expensive to produce. So I ripped a bunch of information off of DTN for fertilizer. They do a good job of putting out these price graphs and where we've been and where we're going in terms of fertilizer cost. Looking at diammonium phosphate prices at 1846, we can see that 2020 is trending much lower than we have in 2019 and 2018. Some of you may already be asking, why is that? I'd love to tell you why. I'm not exactly sure. And some of the research I've been trying to do, I haven't gotten a clear answer as to why we're running so much lower. I'm sure, the virus has a lot to do with this, but I'm not exactly sure why. And, if we talk about price outlooks, for our commodities, that could be some of the reasons why we see these lower prices, or for the fertilizer. If we're not expecting as good a yields, or we're not expecting as good a prices, we wouldn't see as much investment in fertilizer. But fertilizer tends to follow natural gas prices, and it tends to follow our expected profit from our different commodities. So, this is probably just a whole lot of expectation moving forward, and we see that phosphorus price is quite a bit lower, which is going to be very good for our wheat producers. As we know, we banned a lot of phosphorus in row to account for our low pHs, so that's going to help our budgets moving forward compared to previous years in terms of phosphorus, and phosphorus can be very expensive. Looking at urea prices, urea is tracking pretty close with where it was in 2018, but quite a bit lower than 2019. Again, good news for our producers. If I was to show you, anhydrous prices, which a lot of our wheat producers are currently going out with or have already gotten anhydrous put in the ground, these prices are back from in July, I think is when these graphs were made. Yeah, we see that ending there in July. So that was when a lot of our urea anhydrous was forward contracted. So these prices would be pretty accurate for what we're going to see for the coming year in terms of cost of production. Again, pretty good news. I don't have a lot more to say about that other than our fertilizer prices are trending lower than they were last year. So ripping more numbers off of Russ Quinn here. He's the guy that puts out most of this information for DT. And as of August 7th, anhydrous was 22% lower than a year ago. MAP is 19% lower. DAP is 16% lower. Again, both of our phosphorus sources right there. You might have you'll have 1152 for MAP and 1846 for DAP, if that makes more sense to you guys. Urea is our 4600. We'll have that in drills or going out right before planting at 17% lower. It's going to be a little more expensive than anhydrous on a per unit basis. So the probably the biggest change here with anhydrous being 22% lower is if most of our guys are running anhydrous up here for our wheat producers. That's going to be a big positive to our budgets. Going down, looking at liquid, 28, not as much 32 down here. Most of our stuff is going out to 28%. That'd be 19% lower and 18% lower respectively. And then lesser importance to our wheat producers, potash and 1034 at 10 and 5% lower. All good news across the board there. And that's probably the most you're going to get out of this presentation in terms of solid numbers is that fertilizer prices are quite a bit lower this year. And then if you want to kind of extrapolate what does that mean? If you were comfortable spending what you did last year on fertilizer, you might put out a little bit more in terms of product, hoping for a better crop, hoping for better yields, if you can afford that fertilizer cost. If you couldn't, opportunity to lower our break-even numbers. So as we get into soybeans, I need to move something here for Zoom so I can see what I'm doing. All right. So we got soybeans. A lot of numbers here. Thank you, Roger, for putting these out. I stole all of your sample budgets, as you can just download them right off the web page there, agecon.okstate.edu/enterprise budgets. Roger may put the link in the chat if he would. That would probably help me out. I may have said that wrong. But you can download these without logging in, so you can get kind of a base information about these budgets. There's something that everyone needs to know about these budgets, and that's we're not assuming fixed costs in these sample budgets. So we get away with that by looking at using custom hire or custom rate numbers in terms of looking at the different, whether we're working the soil or we're sowing or harvesting, everything's custom. So we assume that fixed costs are included in that number. Also, what's not in here, and you might notice, is any land cost. So there's no owned land cost. There's no rental cost in here for land. So we'll look at that as we work through these budgets. But it's kind of important that we put out this base sample budget to give you a starting point, but you have to work it to fit each individual operation. Now, this budget is built off of Roundup Ready soybeans, kind of a low input operation here in terms of these various input costs from what I can see. Right here as we begin, we're looking at a 25 bushel yield. If you look at the north central region of Oklahoma, that number tends to be a little bit higher, but as a state average, it's probably a pretty good place to start. 860 price falls within this range. These are cash prices that I've been reporting weekly. That's the most recent one, 841 to 893 per bushel. So 860 is fine right there. We're probably, as we see soybean prices increasing as we move into harvest, probably going to have a lot of producers just selling as soon as they hit the grates at the co-op, because this increasing price, there's pretty good option for our producers just to go ahead and market right at harvest there, as we've seen this rally in prices as we're moving towards harvest. For our early soybean producers here in Oklahoma, they're going to get to take advantage of that. By the time double crop comes in, it might be a different story. We will see. But we're getting total revenue here of $215. most of the time I suggest producers want $200 an acre in order to break even. So if we come down through here, the first thing I kind of have highlighted is the Roundup Ready soybean seed at $44.20. The biggest issue you're going to see with producers is that the amount they plant, the type of soybean seed they plant varies drastically, and it's almost impossible to put a budget together that fits everybody. Again, this is probably looking at a low cost. If you're going out anywhere from 75,000 seeds up to 140,000 seeds, which is what I did this year on my farm, you can see how that might be a big difference in price. And actually, like on my operation, I planted Roundup Ready Extend beans. So we had 2 herbicide technologies in there. I'm probably actually looking at $70 an acre on my beans as opposed to $44.20 in terms of seed cost. A big hit right there in terms of if this budget makes money or doesn't. Fertilizer is what it is. Probably looking at some phosphorus here, just depending on the year and the producer and the farm. 1045 might be right. It could be more than that. You just have to work with your producers and determine if that number is correct for them. Custom harvest is what it is. That changes with yield, so that's a hard one to adjust without knowing exactly what our yield's going to end up being. Pesticide at $40. Again, pesticide includes both spraying for worms and it includes our herbicides. And if we come down to custom hire, this will include some spraying applications, but these are no-till rotation beans, so this shouldn't include any tillage operations. Looking at $40, if you're planting soybeans and you're a typical wheat producer, you're probably going after some winter annual weeds, so you might have a little more cost and burn down if you're trying to make sure you kill rye before it goes to seed or ryegrass or whatever you're going after. If I just kind of ran through, you probably have at least 2 burn downs. You may have 3. If you have 2 burn downs, you plant and then you burn down right after you plant with your pre-emerge. That could be up to 3. You have an in-season herbicide application, at least 1. And then an in-season pesticide application. So you're looking at 5 applications there. And if you're familiar with budgets and what we've been doing, a lot of co-ops have been charging $5 an acre custom application fee. That number is going up and it's increasing pretty quickly. I've seen anywhere from $5.50 getting up to $6 and pushing higher than $6 an acre as we get into these bigger row crop rigs. That are getting more and more expensive for custom applicators to operate and depending on how fast you want service. So something to keep in mind that, we're looking at 5 operations there at $5 an acre is $25. But if we start creeping that up, we could be as high as $30 or $35 just for application. So that's where we come down to custom hire. That number could be good. We might need to move that up depending on this budget. But if we're looking at burn downs, it's easy to get $10 to $15 an acre in burn down chemical if you're using premium products. So I'm just looking here, if I start counting this out, maybe $15 for both my first burn down applications. So that'd be a total of $30. Looking at pre-emerge and another burn down, you may be up to 20. In-season herbicide of 20. We're using, those premium products because we're looking at the different herbicide technologies with those beans, and you have to can't be using generics with those. In-season pesticide, plane costs are getting very high. Used to be you could hire a plane for $5, and now, this year they went up another 25 cents on me, up to $8.25 an acre just to fly the plane. That was $14. So just hashing out some math here, up to $50, $70, $85 is probably what I'm looking at on my beans, instead of $40.04. So then we get down, the rest of these numbers are fine. It's whatever, pretty close to what you're going to end up seeing. What's more important is as we get to land, what is our land costing? And land has gone down. Land rental rates have gone down, our custom rate surveys. But in the North Central region, you're definitely going to be somewhere between 40 to 50 would be my guess if you're actually renting land and not having rented land for a long time and not adjusted your rental rates. If you're going out and finding new land, that's what it's going to end up costing you. If you get into different other regions of the state, you may be in that 30 to 40 range, which is what the rental rate surveys would suggest you should be at. And I've written an article about owning land and the value of land and renting land here for our most recent Ag Insights newsletter. So if you see that, check that out. But if you add another $50 an acre to this, we're getting closer from this 185 on mine to I'm feeling more comfortable breaking even probably at 275. So whatever that ends up taking, to end up breaking even, that's probably more real world for a lot of our producers. Now, again, in my situation, on my budget, I'm looking at very high seeding rate here. A lot of people won't be that high. So you can take that into account. You might back that down to $60 or $50 just to, if you're kind of thinking in your head what someone might actually have to spend. My budget's going to be a high cost budget, but at 860, we're looking more like 32 bushels up here instead of 25 just to break even. So again, keep that in mind, kind of playing with these budgets and working them. This is the type of stuff you have to do. You take a sample and then you adjust it for the producer. That's taken a lot of the time. I'm going to buzz through the rest of these because I feel like they're pretty close. Looking at corn seed prices, depending on your technology, just think about that. That might be different, but looking at a 334 to 384 cash price is what I've been seeing here recently. This number may be a little bit high for our estimate. And again, another thing to point out, when we get into our crops that require nitrogen, soybeans or legume, they produce their own nitrogen. If we're looking at an 80 bushel yield, there's probably most of our producers out there fertilizing for more than that. And these budgets tend to only calculate the fertilizer we actually need for the estimated budget. I'm not sure very many producers are going out there and fertilizing for 80 on the dot. So consider that they may be fertilizing for more and costing more money there, even though they're probably getting 60 to 80 bushels, but they're probably fertilizing for more. All right, so we have corn, 312, total operating cost 282. Looks like corn can work. But again, keep in mind, see, our pesticide costs for corn are quite a bit higher here, and that fits more with what I was talking about with soybeans, kind of that $80, $70, $80 range in terms of pesticide costs. Looking at dryland cotton, a little bit of a fish out of water when I talk about cotton, so I apologize. But, 65-cent board price. You saw some estimates from Dr. Anderson about what the price might be. 62 cents is probably fair. This 600 pounds here, looking at 372. Cottonseed at 63. This usually pays for the ginning, and it's a trade-off. 435. And you come down here, I've gotten some talk from producers that maybe ginning and processing could be more on this budget. Just depends on where they're going and how far it has to be hauled and how busy the gins are. Everything kind of goes into that. Might increase that, but there's quite a bit of buffer here. So if you're a reasonable cotton producer, and I don't think 600 pounds is out of line for most of the guys that are really doing it for real and have been doing it for many years. As long as it rains, it's all about rain there. Probably still feeling pretty good on cotton in terms of being able to cash flow. But again, keep in mind, again, with corn and cotton, I kind of blew over that we have to keep in mind that land rental cost. So whatever money we're making over our operating costs has to go to pay for that land enterprise, or that land cost in the enterprise. So again, if we're looking at corn here, I skipped back to corn, $30. We've got $30 here to pay for land. Getting into more fun here, grain sorghum. This price on grain sorghum needs to change. This was a fair price back whenever the budget was built. But, China has showed up to the plate and really started buying a lot of grain sorghum again, so we have to adjust that up. Again, probably with this 60 bushel grain sorghum yield, we're expecting that this fertilizer cost is probably a little bit low. If you put out 100 pounds, because a lot of people think they can grow 100 bushel grain sorghum, so they'd put out 100 to 120 pounds of nitrogen. At anhydrous, that's going to be somewhere around 20 cents a pound. So you're looking at, $20 to $22 an acre just for anhydrous, and they're probably going to have some phosphorus in with that. So keep that in mind. That number's pretty close, but it could be closer to 30 or so by the time you get all your phosphorus put on, depending on the producer. It just depends, and what fertilizer source. If they're using UAN to go out there with that, you can up this number quite a bit more, 30 to 35, just for the increased cost of nitrogen from that source. Anhydrous is going to be our cheapest source of nitrogen fertilizer. Pesticide, probably fair. Sugarcane aphid has a big issue with that, depending on whether you have to spray or not. If you don't, probably goes down a little bit, but just depends on what your preseason burn down costs are going to be. We can probably use all generics on this budget in terms of chemicals if you want to get that price down. But getting to the end here, made 210. Again, we need to increase that just a little bit, 25 cents a bushel or so. So we get a little bit back from that, but still barely enough to cover this deficit. You know, the increase in price we've seen probably takes this back to zero, but we have land sitting out here that we haven't paid for yet. Going forward to canola, 487 to 529 per bushel price is what I've been seeing. So again, probably pretty fair for this budget to keep going there. The seed cost looks good to me. Fertilizer is what it is. I have to change that for each individual producer. Not looking too good. So if you're going to grow canola, you got to bump this yield up. That's the only way we're going to be able to make this budget work. Now the canola guys, the agronomists will tell me, keep in mind, you have benefits to the wheat enterprise. You're reducing dockage with canola. So, you know, this isn't something you just plant to make money. If anything, it's a good cover crop to try to clean up our wheat fields later on. So keep it in mind, keep considering it, because even with that 35 bushel wheat yield and this 1,500 weights of canola yield, this is in a pretty average year, and the last 2 years have been phenomenal in terms of wheat yields, and canola has had a place as well in some of that. So just keep that in mind. There are opportunities for these crops to flex a little bit on yield and make these budgets look better. Looking at sesame, sesame's pretty good. I don't see a whole lot of problems here. This is probably considered a low yield at 550 for a lot of producers now that are used to growing sesame and growing sesame every year. If you're a new producer, I still use 5 to 550 just as a safety net. 35-cent contract price, that doesn't change. So you sign up for that price, and it can range from 30 to, you know, if you have irrigated sesame, sometimes they'll pay up to 40 cents. So keep that in mind for your producers. Not all prices are going to be 35, but that's middle of the road. 3 pounds per acre, probably specialized seeding equipment. You're either going wide rows with drills to get down that low, or you're using a planter. Planters can get down to 1 pound, so you may see some people who have an actual $7 seed cost here as opposed to 21. I like to use 3 because it ensures you get a stand, and if you don't get a stand, you don't have a crop. So I still, in my budgets, I use 3, but there's quite a few producers out there that have been doing this for a while that would bump that down maybe to 1.5 pounds, 2 pounds at the very most on their operation. Pesticides are tough. For labeled pesticides, this is probably good, and I'll leave it at that. But keep in mind that you've got a lot of various burn downs and operations going on. This could be a double crop operation, so we're going in right after wheat has been harvested, so there may be one burn down application and you're planting sesame and you're off to the races. We have been seeing more and more pests coming into sesame. We used to say you didn't really have to spray for bugs, but it's getting to the point now where enough acres have been in Oklahoma long enough that we're seeing leaf borers and other things causing concerns in sesame. So we're going to have to consider that pesticide cost either staying the same, going up as we move forward. But if we're looking at 192 at 550 pounds and 185 cost, we have this $7 here. Cash rent again is at 0 here. So consider that return to the land as needing to be still fulfilled in this budget. But like I said, you see a lot of people, this 550, you're going to start seeing more and more 7 to 1,000 pound growers. And that would be more typical of what they can do on good land. And you see it year in and year out, and we tend to be getting the rain through the summer that justifies that. So keep that in mind. So getting to the dry land wheat enterprise, 418 to 447 kind of cash price there. May see that go up, but we'll see how things move. We got an estimated price in here of 450 at 35 bushels. So that gives us that 157. I did include the small grain pasture budget here at 38 cents per pound of gain. So keep that in mind. If you're running your own cattle, that may be higher, but considering the true cost of running animals, I still like to use that gain number because that's a fairly safe number to assume early on in the season. Looking at $200 an acre, typically that would be plenty. But as we get down here, I'm looking at $11.50 per bushel. Depends on where you're getting your seed. If you're buying certified seed, you may have to bump that number up a little bit, either closer to 13, somewhere in there maybe. Just depends on where you're getting your seed and what varieties. The newest varieties command a higher price. So again, that's going to vary a lot per producer. Fertilizer could be fair, probably includes a bunch of phosphorus, banding phosphorus for our wheat. Custom harvest, good to go there. Pesticides. This is a conventional budget, excuse me. So we're working the ground here. That's where you'll see this custom hire come into play as being a very big number. And, if you're running brand new tractors and brand new disc and chisels, you got to pay for that stuff somehow. And that $117 an acre, I would say, is a fair number. But you will also have producers that are running equipment that's 40 years old and isn't going to cost that much. So it's going to be a big range for our producers in terms of what it's costing them to actually work their ground. So again, we end up seeing this budget come out at total cost of $247, which the Wheat Commission will not be happy about here, as we're showing a $48 loss. Again, the last couple of years, this 35 bushel yield has not been what producers have seen. We've had a lot more 40 to 60 and some even pushing 70 bushels on some of these budgets. And that's why you see these wheat producers continuing to operate and continuing to do well, because we have seen good yields. If we do have an average year, it's going to be a problem, because I don't see a lot of this changing. These numbers seem fair to me, and we're going to have some issues in terms of paying for these budgets, because this also includes those cattle, and you can increase this cattle number a little bit if you own the calves, but you also increase your risk. There is a possibility that number goes below $41 if you have a lot of death loss, or we actually see snow through the winter and they don't gain as well. There's always that opportunity for that number to go down. So, by the time we come into land here, the land cost being anywhere from $30 to $50, that's making this budget pretty tough to swallow. And if you see other budgets that are somewhere around I usually use $175 an acre to $200 an acre. Again, that's what this custom hire is doing to this, assuming that you're hiring all of your operations done, and most people won't assign this much value to their operation. So whether that's right or not, you cut it in half and you about break even, but you still got to pay for land, so you're still losing $50 an acre. So probably needing $200 an acre at least to even think about breaking even, and then that's probably still wearing out our equipment without paying the total depreciation cost on that. JC, that's what I had to say. I got just about to the end here. Does anybody have any questions or?
Any questions for Trent? Well, seeing none, I thank both of you very much for being a part of our presentation this morning, both Kim and Trent. Thank you.
Sarah asked if people are still considering hemp. I assume they are, but it hasn't been something that I've heard a lot of questions on recently. We kind of punted all those questions to Scott, and I don't know if JJ has. I think JJ's on here if you'd want to comment on whether or not he's been getting very many questions about hemp, but it's really quieted down for me. I haven't seen very many questions about hemp. So if they're doing it, they're not asking us about it. I think a lot of people ran into problems in terms of finding buyers for that product. The early adopters, you know, that they may have had 1 year of good success, but from what I heard, they were having a lot of trouble moving product and getting product sold, for what that's worth.
Yeah, Trent, you're right. That's what I've heard too. They're still trying to move last year's crop. And so I haven't heard anybody talk about hemp. It's been real quiet.
JC, I've got a question for everybody out there. I've had a few farmers tell me, 2 or 3, that their landlords are strongly suggesting that they move back from summer crops to wheat. Is anybody out there hearing that, or was that just kind of an anomaly?
For sharecropping, you mean?
Yes.
Yeah. I don't know that I've heard that, but it kind of makes sense to me in some ways. They're probably tired of the expense, and they've heard a lot of good wheat yields in the last few years. So they're probably wondering why they weren't growing wheat. Be my guess. That's all. That's all that is.
Any other comments or questions? Not seeing anything happening in the text or chat box. Again, thanks for attending. Our next scheduled session will be in November. If we come up with a need for an update between now and then, I'll be sure to let everyone know. Other than that, I'll make sure credit's given to all those that attended. Thank you very much for being with us, and I'll keep you informed of the future. Thanks again. Bye.